Good afternoon, everyone. Rob Lukey with our Capital Group. I wanted to take a few minutes to reiterate what an email that was sent out earlier this week as far as the Case-Shiller Index. Remember, the Case-Shiller Index is a widely used index to establish home prices in the United States. The index did show a slight tick up, but remember, I mean, what we anticipate and what we've been talking about is that you're going to see this choppy move up over the next 5 years, similar to what we saw happen in the stock market. If you look at the last 12 years as far as a pattern goes, we anticipate that same type of pattern to occur in the real estate market, where we're going to see a choppy move up. And even though we've only seen about well, at this point, market's at 11.6, so we've seen about a 20% return since the bubble burst, the internet bubble burst in 2000. By taking advantage of the short-term trading that occurred in the real estate market, you obviously could have increased that return, and we did, but it could have increased that return significantly. What I wanted to go over real quick is how to get involved with this, because there is a great opportunity here to take advantage of some of these investments, for example. And remember, when you go to past performance, this is password protected. So it's large cap OCG, and then the password is welcome. And then you'll be able to see all the properties. And remember, you can look up these properties on the King County, Snohomish County, or Orange County websites and actually see the purchase and sale prices. What you'll notice is that the purchase price and the sale price is actually where we're looking at is 180, but it doesn't have, obviously, the profit after expenses says 10.28 per 10,284, for example, on this particular property. But the reason why is because we too take into account the rehab and possession account when we're actually looking at the overall return. So just to let you know, when you do look, you'll see these prices, and then when you calculate the profit, you'll say, well, why is there only a 7.27% return? And that's because of rehab cost or possession cost that we had associated with the property that we took out of it. If you look at the last 4 properties, this one we're taking possession of on the 17th. The last 3 properties that were purchased is sold. This one is pending at $155,000 with about $1,000 in rehab costs, so very good. This one on Devon's Way is pending at $520,000 with about $1,000 in rehab costs. This one is pending at $327,500 with about $6,000 or $7,000 in rehab costs is what we anticipate. Now remember, to get involved with these things, what you can do is you can do there's a variety of ways to get involved with our Capital Group. And you can get involved simply by being a partner, where you could be a 50-50 partner in a property with us. You log on to our software, you see a property, a hot property. What it allows you to do is it allows you to take advantage of the short-term fluctuations that you're going to see in the real estate market over the next 2 to 10 years. And yeah, it's important to have some long-term investments, but our comparison to stock market or even gold or commodities markets, and the value that you could potentially see, the returns by taking advantage of the short-term fluctuations through our company, I think you'll be happy with. In a market trending down, we've been able to net over 30% a year. In a market that's moving up, those returns we think will be significantly increased. So anyhow, if you have any questions, feel free to give us a call here or take a look at our website. Thanks a lot.